Good morning, good evening, and good afternoon. Hope everyone's well and you guys are having a great day. Okay, so next follow up in the series is why do day traders fail? We're going to be pretty blunt in this video, and we're keeping the same theme of more of a presentation, taking a step away from the charts. Is the longer you trade, it gets less and less about the strategy, to be honest. Okay, so what will we be covering in this video? Okay, some of the main things that I see people ask me, and it's just the continual theme. Okay, so do you truly have an edge, and are you journaling? Do you understand how the market moves? Are you trading prop or personal accounts? And which stage of your trading journey are you truly at? And you need to be honest with yourself. Okay, now, quick discussion regarding the journaling. We covered the journaling video in the previous segments in this series, so I'll leave a link in the description. If you've not watched that, I would highly advise that you watch that video. Okay, is it's extremely important to be journaling in order for you to know what your edge is. Okay, so regarding an edge, do you even have one? Is probably the main question. You know, So you need to take into consideration what is your profit factor? Do you know what this is? And there's a lot of different parts that can help facilitate your edge, and things being what times of the day do you trade? What is your are you looking to take a profile extension or a mean reversion trade? Okay, because very common what day traders will do is they'll just sling on the charts whenever they feel like, and they just click buttons, to be honest. So you need to know the times that you are most likely within your trading strategy in order to make money, rather than just clicking buttons in pre-market, post-market, close when the MOC data comes out. So you need to take all that into consideration. Are you in a consistent phase with your trading, or are you still going through the boom and bust setup that many traders um, they go through? Very common, where they'll make a ton, lose a ton, blow accounts, rather than consistently taking a little bit from the market every day. Another thing you need to really take into consideration, um, are you in a place in your life where you're ready to assume risk and be able to take on the challenge that is day trading? And what we mean by that is, if day trading is your only job, realistically, you need to have some decent money behind you in order to not be scared and be fearful when you're putting money on the table. So you need to be accustomed to that. If this is your only job, you need to have some savings behind you, or you need to be working a job so that trading is not your only income. Because if you've not got a proven edge and stats behind you to back up your trading, you've got no business day trading and trying to take money out of the market. You're putting yourself up with a bigger chance to fail. So make sure that you've got a proven edge before you even consider trying to have this as your only income. Okay, and then as well, you need to make sure that you've been able to give yourself enough time every day. Have you got distractions? You know, for example, have you got siblings or family or spouse, whatever, running in and out when you're trying to execute trades? This is part of life. It happens, but you need to be able to dedicate enough time to the charts a day where you're focused and you're vital, and you can consistently execute your edge. Okay. Another thing that we need to consider, that if you're not new to order flow, okay, you probably do not understand truly how the market moves. Now, we cover a lot of this on this channel, where we discuss the different types of players that are in the market, and you need to know the competition that you're up against. Okay, Because as soon as you realize how the market moves and what competition you're up against, it gives you a better chance that you're able to take money from the market. It's like any other business, okay? If you were selling Mars bars, you would know which competition is, within the vicinity in order for you to try and increase your sales. Trading is no different, okay? And once you start looking at order flow, you'll start to notice and see things where these market making firms are working the book, okay? Now, I'll put another link in the description to where we discuss this with actual live trade examples and where you can see this on the charts, okay? But you need to understand as well the day type and context. We absolutely hammer home in all of the videos and in the streams context, context, and context. Just as a very bare bones example, right? Prior to NFP coming out, on Friday the 5th of July. Okay, this has been filmed on a Saturday. Prior to NFP, if market is probing the lows, right, the probability of that extending the lows and continuing to break the lows prior to an NFP event coming out is pretty low. Why? Because no one is going to be committing funds that can ultimately move the market prior to these data point flows coming out. Okay, so this all factors into what day type you're in. Are you above initial balance? Are you one time framing? What data points and flows is coming out? What is the Fed sentiment? Okay, all of this needs to be factored in to your trade plan and playbook for that specific day. Okay. Now, another thing that I'm not entirely too sure if everyone realizes this, but over-the-counter orders or OTC positions are a thing. Okay? And what I mean by that is, say it's a Monday. Okay, Monday, say lunchtime. Okay, there is no more data coming out in the calendar for that session. And there is X amount on the book, both long and short. Okay, large firms can take a position. They get a call from a pension fund or another large fund that essentially wants to either sell part of their portfolio or ultimately to take a position. They do not have the facility to carry out that position themselves, so they phone the likes of a DRW, a Citadel, a JP Morgan, or a Goldman. Okay, Goldman, as an example, they then quote them a price that's below the best bid, or above the best ask, depending on what position is there. They then decide if they then want to hold that inventory or they then want to instantly get it off their books. Okay? So what then happens is the market can move, and break highs and break lows with no news. Nothing. Nothing has actually happened in the underlying stocks in the S&P or ES. Okay? The sentiment has not changed. But it's simply these firms have received large orders or they've done it over the counter and they need to hedge off their exposure. Okay? That is something that happens and you need to be aware that it happens in order for you to step up to the plate and take your edge without hesitation and without fear. Okay? And this also then comes into the next point of you need to start putting your large trader hat on. Okay? And to elaborate on that, large traders in these market making firms, they do not need to trade directionally. Okay, they're net long and net short certain asset classes. Okay, if they're net long from a certain position, they can essentially spend more money to take it up because their average price is below. Okay, and you need to start thinking of whereabouts on the chart and on the book, the depth of market, are these large traders going to be looking to liquidate their positions? Okay, very typically when you start to watch the depth of markets, you will see them do this at key inflection points on the charts. which is typically going to be areas of previous day highs, overnight highs, okay, monthly highs, weekly highs, so on and so forth. They'll do that at these areas and they push price to there because they then know there's going to be a large amount of orders there where they can start exiting the long positions. And as we've covered multiple times in the channel, for every buyer there has to be a seller. Okay? So in order for them to exit their long positions, there has to be someone there to take the other side of that trade. And the quickest way that they can do it is they can trigger stop orders and get out of their positions. And then very typically what you'll see is when they're out, they then instantly flip and work the offer, okay, and hold price, and then they start hitting into the bid to drive it back down to the most traded place within the day, within the week, and into a point of control or higher volume node is what you would really look to target. Okay, so you need to consider this. It's very important. Okay, for you to understand how the markets move and take all of that into consideration. Okay. Now the next one. This is quite interesting. So I've been over the last, I would say, couple of months. I've been gathering some stats just to see collectively where the community sits and in general how to factor this into to trading prop versus a personal account. Okay, so very quickly, I had ran a poll. Now the sample size is not massive, but it is pretty almost concerning, to be honest. Okay, so how do you manage your futures trading capital? Okay, the majority of people said, nearly more than 50%, okay, said that they're managing it with a prop firm. Now, we know that retail has basically been gobbled up by prop firms. That's just how they've, in essence, taken anyone that's got below a 10k account and feeding them into these combines, valuations, whatever you want to call them. Okay. Now, how long have people kept a prop funded account? We have an overwhelming majority have not kept it for more than 3 months or even been funded at all. Okay, and then they continue in this continuous cycle of um, going to valuations, going to different prop firms, chopping and changing strategies without really getting anywhere. Okay, and the harsh reality of this is what we're going to dig into now, is realistically they advertise that you're getting 50, 200k buying power with a really, really small drawdown, which in essence comes down to, like, if it's a 50k account, the standard is, maybe 4 to 5% drawdown of that account. And realistically, okay, you're just risking too much and using too much leverage. So they give traders with not really much experience large buying power with too much leverage, okay, and in essence ask them to basically make 100% return on what the drawdown level is. Okay, so these firms, you need to have a really defined risk strategy in order to pass them. Okay, and we're going to factor in this equity graph here. We're going to discuss that in a second, but it also boils down to that you're just not controlling the down days. That is simply it. Regardless of trading prop or trading your personal account, you need to control the down days. It is the most important part to any of this. If you cannot control the down days and you end up just going on tilt and mashing keys, you're never going to make this. Okay? So rather than focusing on making money, you just need to focus on keeping the down days controlled. Okay, and we're going to run through in the next stage here, the next slide, the different stages that you have as a trader. Okay, now this equity graph here is a very common one. Okay, now I'm going to get this pen here and we're going to draw this. Okay, so very commonly in a prop firm account, you will probably start where you're getting, you're doing well, it's going down, Then you have a very standard drawdown period, okay, where you lose pretty much back to break even, okay. So say this is back down to break even. And what happens in this process here is, because of the trailing drawdown, your account shrinks, and in essence, this drawdown period here blows your account, okay, which is not great at all. And in that process, you feel like you failed. And what happens a lot of the time as well is even worse, is people then strategy hop, okay? They strategy hop, and then they continually go through this cycle of boom and bust, going to different prop firms, never getting funded, or getting funded and not keeping an account for more than 3 months, okay? But then realistically, what the case is this is just a standard drawdown here, and if you're trading this in personal, you would grind through it and then you would make highs on your account, okay? And very typically, even worse in this process, right, is people are not even keeping their stats on these evaluation and prop firm accounts. So when you close an account or you fail a challenge, you get another account, then you don't import the trades, so you don't keep enough stats on your positions in these evaluations. And then again, what happens? You then suffer from recency bias. Okay? Extremely common where that happens. So my advice is to keep the meticulous stats, regardless if you're failing evaluations, because what you'll probably find, unless you're way off the mark and you don't have an edge, over the last 3 or 4 prop firm evaluations, you're probably break even. You're probably doing this, you know, up, down, up, down, up, down, you know, something along these lines. When actually you're pretty much just towing the line of break even, right? But because of the prop firm rules that are essentially put in place for you to fail, you end up failing the challenges. So please keep your stats. Do not strategy hop. Give yourself at least a couple hundred trades of sample size so that you can play out your edge, okay? And really take these accounts seriously. If you've got 2 to 3k drawdown, you shouldn't be risking $500 a trade, you know? You need to be risking giving yourself at least 15 to 20 cracks at the cherry so that this never happens, okay, is a consistent long-term play so that you can get past this 3 months, okay? So say you're passing them, people are ultimately seeing, dollar signs rather than a long-term approach. I mean, majority of people are not even getting past a quarter. That needs to change, and the only way to change that is to change your risk profile, the leverage that you're using, okay, and you need to control the down days. That's what we need to do here, okay? Because if you were trading in your personal account, right, with this same graph, you wouldn't have these problems because your account doesn't shrink. You start with a drawdown here, as you make money, your drawdown follows you, and then you actually get stopped out here when that is not actually the problem, okay? So give yourself a fighting chance if you're going to be trading prop. As another thing, we're going to do another video on it at some point, but prop firms are there for a specific reason, okay? You need to take as much money from them as possible. There is not truly any ones that are there to help you, okay? It's not like the original prop firm business where you would maybe only be getting 40 to 50% of the returns, but they put up the capital and you've got better commissions, okay? The commissions with these firms are shit, and they don't even back you. They just transfer you to a live environment with the money that you've even made anyway, so they can get you off their books and reduce their exposure, you know? So please take all this into consideration and give yourself a chance, okay? So we will jump on to now. What stage are you at in your trading journey? Okay, and you need to be honest with yourself, you know. So the typical journeys that we have as a trader is you first start off, you don't know what you don't know, okay? You don't even know what an edge is, and you're still working on one. You gradually find some strategies, whatever that is. Hopefully, if it's ICT or whatever the case may be, you go through a phase, you start working on it, you see some dollar signs, and you plug away. But realistically, you don't have an edge, okay? This is very, very common. Even worse when you start throwing in strategy hopping. Strategy hopping is the worst way that you can trade and to try and extend your learning curve, because you spend 6 months on one, you blow it out, you spend another 6 months on another, before you know it, you're 2, 3 years down the line and you still don't know your arse from your elbow. Okay? So first stage is just getting your feet, dipping your toes in, and trying to determine what the market is and how to push forward. Okay, normally we find that traders are in that sort of cycle for a couple of years. Okay, in order to shorten that cycle, you need to be consistent with the strategy and do not hop around. Okay, then the next phase in the cycle is you lose a little, and you're roughly break even, okay, over a decent sample size. Now, this is sometimes slightly harder than being profitable, because if you're not journaling and you're break even, um, you need to really run through your numbers to see where you're going wrong. Are you losing too much and you're losing trades? Are you not taking enough on your winning trades? We covered a lot of this on the journal video, so I'd recommend watching that. But when you are break even, you need to think of, are you over trading? Is commissions killing you? What's your max adverse and max favorable excursion? What's your gain to pain? Do you risk too much for the actual money that you return? You know, so this is the next common cycle. And then we have the classic boom and bust side, which is you make tons, you have a big couple of weeks, where you're shooting for the stars and you're making a shit ton of money, all to just give it back to go back to break even. Okay, and again back to the losing side of the prop firms if you're in that cycle. Okay, now when you become profitable in trading, you essentially, the mindset changes that you view it as, tomorrow when the market opens, I will have the facility to at least take something out of the market. Okay, I'm not going to go for home runs. If the home run presents itself, which happens in the law of averages, okay, then I'll take that opportunity. But I then have the confidence that I will be taking at least a little something out of the market for the exposure and risk that I'm willing to put on the table. Okay? And this is the different cycles that you go through. And to be honest, to get from not having an edge here and knowing, really what the market is and how it moves and everything in between, to getting to here, where you can consistently pull something at the market every day, is vast. Okay? The journey that you need to go through as a person, as a trader, okay, and the psychological battles you're going to have is crazy. Now, the objective of this channel is to get you to shorten that curve so that you're not spending years and years and years hopping around, not knowing your edge, just really not having a clue what you're doing, thinking that you've got an edge when realistically you don't. If you're not journaling your trades over a significant sample size, or you've been doing this for 10 plus years, and you cannot say that this specific strategy gives me an edge, okay? You don't have a fucking edge, right? That's the blunt part about it. Okay? So you need to know this. And you need to really be in tune with the flows that happen, what fundamentals are in play. Now, are we sitting analysing, what happened 6 month NFP versus today? No. But you need to know what the flows are for that session in order to see if the sentiment is in line with the market across the different asset classes as well. Okay? So This one has been relatively short and sweet, but I just wanted to shine a light on these prop firms. It's the majority of retail is in this prop firm environment, and they just continually boom and bust, risk too much. Um, with obviously the end goal is if they don't have enough capital, they want to pull money out of a prop firm to then put it in to a personal account. But let's be serious. If you can't manage 2k of drawdown, okay, or 3k, whatever the number is for these evaluation combine things, if you can't manage that and manage that leverage and manage that drawdown, how are you going to do that in a personal account? Okay, where you can actually swing trade and not close the position and move your stop. So you need to go through this journey. You need to try and improve every day and make sure and take note of everything here, because the objective, as I've already said, is to if you show up every day and you journal and you build a sample size and you try and improve every day, not only as a trader and as a person, you will get to the next stage in this journey. Okay, but you need to try and identify which part you're in. Okay, and be honest with yourself. Okay, so I hope this video was helpful. If you guys have got any questions about this, make sure and leave a comment below. Okay. If you could do all the YouTube things for me, hit the like button and subscribe. I will also leave, as discussed, I'll leave the videos in the description that was the previous segments to this part. If you've not yet got a journal, I'll leave a link to TraderSync in the description as well. But hope everyone has a great weekend, and you guys take care, and we will catch up in the next video. Okay? Peace.